All right, now that's our promised conversation that I had talking about Africa looking inwards. Of course, the issue of rating does come in, but can the continent develop its domestic debt market to serve its purpose? That's the conversation I had with the head of strategy at S&P Global.
Ratings are forward-looking opinions about the creditworthiness of an entity, and it boils down to the ability or the willingness, the capacity or willingness of that entity to meet its financial commitments as they come due. Right, and ratings are really relative ranking of creditworthiness, depending on which sector. So that's primarily what ratings are. And for me, really, for S&P Global Ratings, we rate a lot of entities in Africa. We rate entities in Nigeria as well, and we rate sovereigns as well. And it's important for us that seeing Africa as a continent, Nigeria as a country, we believe in the growth potential of the region, the growth potential of the country, and the interest really is to understand how we can deepen our engagement in the country, our engagement across the continent. Specifically, how can we help to deepen the debt capital markets, both the cross-border market and the domestic debt capital markets across Africa?
So how would you describe the activities that we have? I mean, we have renewed activities in Nigeria's debt market. How would you describe it?
I acknowledge what you said, right? More activities in recent times, especially from the debt capital market in Nigeria. But if I were to look, just generally looking at it relative to other countries in Africa and the potential that we see, I'll say there's still a lot of potential to be tapped into. Yes, it's a good thing that there are activities. And why do I say that? If I take an example of South Africa, where the debt, the size of the corporate bond market compared to the GDP is north of 40%, right? And when I look at Nigeria as an example, you're looking at about 2.5% of GDP, which tells me that there are a lot of opportunities to do more. Right, and that's why for us, we see a lot of the reform activities and the activities in the debt capital market, and we think there are opportunities to partner up, help in educating more stakeholders, working with bilateral institutions to see how we can help increase that knowledge, help increase the research available to then help increase the activities in the debt capital market, especially in the domestic bond market.
When you talk about a more active domestic market, where does it come from? Who's supposed to drive it?
When it comes to the bond market, it really ranges, right? The key stakeholders, and it goes from institutional investors, the government as well. At the end of the day, when we talk about the domestic bond market, what we're talking about is entities being able to raise funds from folks who are resident within that country, entities, corporations, pension funds within that country. And what it means is really you're raising a bond, and it could be government raising the bond, it could be an entity. I think some of the Nigerian entities, Dangote as an example, would raise some bonds domestically, they will raise some in cross-border markets. And the goal is really to fund projects within the country. So all stakeholders are involved, right? If it's government raising a bond, they can sell to institutional investors who hold these bonds with the promise of a coupon rate that they get on it. Pension funds will probably tap into that as well to turn over the pension of people. So everyone benefits, right? The purpose for which the fund is raised, we don't advise on that. We don't make recommendations on that, because at the end of the day, the investors will look at those projects, look at the feasibility of the project. They will take the credit rating as one of the factors that they consider, and then look at the entities raising the fund and their credibility as well, which is reflected in credibility to an extent, and use that to determine if they should. Now, the essence of having more participation is that there will be more projects, right? When you think about all the projects based on the reform that the government is trying to implement, infrastructure projects, so many other things out there, is the ability to raise funds from the local market to invest in the local market. One of the things you see, of course, is the fact that there's a lot of activity in cross-border where we want to go into a different market, the international market, to raise funds. And that is fine, but there are also ways where we can raise funds domestically to invest in things that people can see, and that can help to develop the domestic bond market, which also says that when you think about issuers, right, folks that are issuing these bonds, there are requirements and high bars for going to the cross-border bond market. But when you're raising funds in the domestic market, it's not as strict or as stringent as when you're going to the cross-border market. So when you think about medium-sized corporations as an example, it's easier to raise money in the domestic market. And then after a while, you can graduate to the cross-border market. So those are some of the dynamics to think about. But at the end of the day, the decisions about what projects to fund will be based on the issuer's strategy and what they communicate to the market.
And you know, we're still celebrating Nigeria's first dollar-euro bond. I mean, I guess that's what you would call domestic but cross-border, since it was targeted at Nigerians in diaspora.
It's a little bit of cross-border, because yes, they're targeting Nigerians in the diaspora, but those Nigerians are outside that country itself, and it's, you know, euro denominated as an example. That makes it a cross-border bond. And even though they targeted, or their primary targets are Nigerians, I'm sure there are other investment firms that participated in it. So that would be a cross-border bond. But if the Nigerian government or a corporation says we're going to raise funds in the domestic bond market, which will be Naira denominated as an example, that's a domestic business, right? The thing, though, is while there are two different markets, there's a lot of cross-pollination by entities depending on the project they want to fund. So if you're funding a refinery project, as an example, you might decide to go to the cross-border market, right? But if you're funding a project that is localized in the country and it's, you know, it's all driven by things going in the country, you may decide, based on, you know, the perception of the issuer about cost of capital and other factors, decide to issue locally.
And while we're on the topic of Africa depending on itself and winning itself of, you know, foreign aids and funding, are there instruments that are, you know, particularly African targeted, just that instrument for Africa, maybe between countries?
I can't opine on specific instruments being issued out there. I can say just from public knowledge, I'm aware there are some MLIs like Afrexim and Co. working on instruments, talking about instruments within Africa, but it's not something that we actively participate in as a rating agency. However, we do have a cross-functional research arm that focuses on research on instruments in Africa, trends, and risk factors as well. So that may be an opportunity to look at that side and say, okay, what's going on in there? But I know there are conversations, anecdotal conversations around that.
And so talking about Africa looking inwards, do countries on the continent have the capacity? Can Africa really do without foreign funding or aids, just depending on each other?
I mean, I won't necessarily comment on the capacity of individual countries. And for us at S&P Global, we welcome cross-border. That's primarily what we do, and we're active across the continent right now on that. We also welcome inward funding as well. And I think the capacity generally is always there, because at the end of the day, we're talking about sourcing funds from people who trust you the most, right? And when it comes to that, there are always available funds where there is a need to invest them. Think about funds in the insurance space, in the pension space. That's excess capacity that needs to be invested, right? The question is, does it get invested, right? And I think to the extent that corporations, entities, sovereigns within the continent are willing to make some of those available, there's enough data and transparency of data, there is definitely funds available. Because when you think about the fund flow outside of Africa to foreign denominated bonds and all that, there is reasonable traction, which tells you that there is funding available. It is now a function of issuers tapping into that, right? And it varies per country, it varies per topics as well.
Well, that was it. Africa looking for ways to develop its debt market and not rely so much on, players outside the continent. We hope that day comes. So it's just before we let you go off the program, yesterday we saw that Nigeria's stock market closed slightly down, really minimal, but we hope it doesn't build on that today at 0.01%. That's where it closed, even though it's still around 109,000, and the market cap is almost 69 trillion, but not there yet. 68.9 trillion is what we closed with yesterday. Today is MPC Day, MPC Decision Day. The meeting started yesterday, and that's what we're doing mostly during Business Incorporated. Ladi will be here with Will Ebon to take you around that, and of course we'll give you live feed from the announcement at the headquarters of the Central Bank of Nigeria. That'll be at 1 p.m., so you don't want to miss it. I'm Ini John Mekwa, wishing you a beautiful and a profitable day. Bye-bye.